Hello, this is Bitcoin Guide. This is the Bitcoin chart analysis for May 7th, and I've prepared a long position strategy. For today's trading session, I have decided to go with a rather bold and aggressive chase buying strategy. I am currently chase buying at the 80.7 thousand mark, right there at the red finger indicator on the chart. And I have set my stop loss to trigger if the price breaks below that purple support line, or if it happens to touch the bottom zone of the range. Our primary target level for this long position is 82.8 thousand on the upside. The second target price objective is 84.1 thousand located within the gap 8 zone. Should the price break down below the purple support line, the bottom zone at 79.8k becomes completely wide open. If it drops to this level and touches the bottom, the midterm pattern will be invalidated. Furthermore, if it touches that bottom zone, the level then opens up to reach zone 1, which is at 78.7k. Following today and moving into tomorrow, the trajectory remains clear toward the 77.8 thousand level within the gap 10 zone. For those currently holding long positions, it is advisable to maintain your position at the purple support line no matter what happens throughout the day. Now let us examine the specifics in greater detail. Fortunately, the current rebound is still very much ongoing. We are currently looking at the 6-hour Bitcoin price chart, and the MACD dead cross is currently in the process of unfolding on this specific 6-hour chart. It was clearly a warning sign, yet I chose to ignore it completely. I disregarded the signal and proceeded to execute a chase buy, relying on the specific criteria that the technical pattern at this current level remained entirely intact. The primary reason I decided to chase that buy was simply to ensure I did not lose any momentum. It is also necessary that we avoid this situation entirely. If you take a close look at the top, you will see a gap of 8, while at the bottom there is a gap of 10. There are two of them. As for that gap 8 section at the top, it was originally formed back in January. It is simply a hole. During the month of January, this is the precise point we are looking at right now. It represents a specific price level that was originally established back on January 31st. Now, regarding the gap 10 section located down at the bottom, that is another level that was actually formed just last week. So, if the price action happens to touch the upper gap 8 zone first, then the upward trend could potentially be at its absolute fastest. However, if it happens to reach the lower gap 10 zone instead, the upward trend might start to slow down once again. So I would really appreciate it if you could keep that in mind. Please remember to use my analysis only as a general reference for your own trading decisions. Please subscribe and hit the like button to ensure you receive the fastest daily updates. Thank you so much for watching our video today.